They told you to study hard, get a good job, save money, and you'd be safe. But no one told you that the rules had already changed. The game of money doesn't reward effort, it rewards ownership. And the people who control the assets control the future. Every second you're trading your time for a paycheck, someone else's money is multiplying, quietly, invisibly, while you sleep. That's not an accident. That's the design. Money as we know it was never meant to make you free. It was meant to keep you moving, spending, working, borrowing, keeping the system alive. But the ones who step out of the cycle, who learn to make money work for them, discover something most never do. That wealth isn't built by working harder. It's built by understanding the game. Investing is not just about stocks, charts, or crypto trends. It's about transferring your energy today into something that will grow without your presence tomorrow. Think of money as a worker. If you only earn money by trading your time, you're the worker. If you invest, your money becomes your employee, one that never eats, never sleeps, and never complains. This is the first mental shift. Wealth is not earned, it's grown. When you look at the world's wealthiest individuals, from industrial titans to modern tech founders, you'll notice one pattern. They don't sell time. They own systems. Owning systems means owning leverage, tools that multiply effort without requiring your presence. Factories did that in the industrial age. Code and algorithms do it in the digital age. Capital, invested intelligently, has always done it in every age. There are two parallel economies running side by side. The one you see, where people work, spend, and consume, and the hidden one, where money flows, compounds, and multiplies. The first economy is emotional, driven by fear, desire, and the illusion of safety. The second economy is mathematical, ruled by patience, compounding, and ownership. Most people live their entire lives in the first one, trading time, chasing security, and wondering why it always slips away. They don't realize that the real power isn't in earning more, but in owning what produces more. Every product you buy, every subscription you pay, every bill you owe, someone on the other side is earning from your habit. That's investing. It's invisible ownership over other people's consumption. So when you say, "I can't afford to invest," what you're really saying is, "I'm okay letting others profit from my spending." The truth is brutal, but freeing. If you don't own, you serve those who do. To understand investing, you must first unlearn how you think about money. You were taught that saving equals safety, but in a world of inflation, saving is just slow loss. You were told that risk is dangerous, but not taking risk in a system that devalues your currency every year is the greatest risk of all. You are trained to think like a consumer, not an owner, because consumers are predictable. They feed the system. Owners are dangerous. They control it. This is why schools never taught you how money works, not because they forgot, but because they were never designed to. The education system was built to produce workers, not investors. And that's why the journey to wealth begins not in the market, but in the mind. Let's break a myth. Hard work alone has never created wealth. Ownership has. You can clean floors, design skyscrapers, or code apps. The effort might vary, but the rule remains. You get paid for your time, not for your impact. Meanwhile, the owner of the system earns even while absent. Take any major company. Workers produce the value, but investors, shareholders, and founders capture it. That's the structure of capitalism, not evil, just indifferent. It rewards capital, not labor. It rewards those who risked before the return existed. And that's what investing truly is. Trading comfort today for freedom tomorrow. Before you can invest money, you must understand what you're buying. An investment is not just a stock or coin, it's a claim on future productivity. When you buy shares in Apple, you're not buying pixels. You're buying a piece of every iPhone, every service, every future innovation that company creates. When you buy real estate, you're buying a portion of human necessity, shelter, that will always have value. When you invest in yourself, skills, knowledge, networks, you're increasing your capacity to own and create assets. Everything that appreciates over time, that generates cash flow or retains value, is an investment. Everything that drains your income and loses value is an expense. Simple rule. If it makes you money, it's an asset. If it costs you money, it's a liability. Most people confuse the two. They buy cars, gadgets, and status, thinking they're assets, while they bleed money every month. The wealthy understand something deeper. Cash flow beats appearance. Freedom beats validation. And time is the only currency that truly matters. Now here's where investing becomes powerful. The rich don't get rich by making one big win. They get rich by staying in the game long enough for compounding to take over. Compounding is the quiet force behind all wealth. It's exponential growth hidden behind linear patience. At first, nothing seems to happen. Then suddenly, everything happens at once. One reinvested dollar becomes two become four become 8. And over decades, the curve bends, wealth accelerates, while others stagnate. That's why the best investors aren't gamblers. They're gardeners. They plant, water, and wait, while others chase the next shiny thing. To become an investor, you need to think in decades, not days. Markets rise and fall, headlines scream panic, but principles remain the same. Own productive assets, reinvest profits, stay in the game. Every crash you survive increases your share of the future, because while others sell in fear, you accumulate in silence. It's not intelligence that separates investors from speculators. It's emotional control. The investor's greatest weapon isn't prediction, it's discipline. The path to wealth begins with awareness, understanding that money is not your enemy, but your tool. It can enslave you or serve you, depending on how you use it. You now know the first truth. The system rewards ownership, not effort. But knowledge without structure is useless. In the next chapter, we'll decode how to make your money grow, how compounding, time, and intelligent strategy can turn small beginnings into generational wealth. Because the secret isn't starting big, it's starting early and never stopping.
Every wealthy person you've ever heard of has one thing in common. They understood time. Not just how to use it, but how to let it work for them. Because money doesn't grow by accident. It grows by compound interest, a quiet, relentless engine that rewards patience and punishes impulse. But here's the catch. Most people never experience this power, not because it doesn't work, but because they quit before it does. The market doesn't care who you are, where you came from, or how much you start with. It only rewards those who stay long enough. In the game of investing, time is your teammate, or your enemy. Albert Einstein once said, "Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it." Most people hear that quote and shrug it off, but if you truly understand what it means, it will change your life. Let's strip away the math and talk about meaning. Compound interest is not just about numbers, it's about momentum. It's what happens when you make small, consistent moves that feed themselves over time. Each cycle of growth creates a larger base for the next cycle. It's exponential. It's unstoppable, if you let it breathe. The problem is, most people interrupt the process. They withdraw too early. They panic. They chase quick wins. That's like planting a tree and digging it up every month to check if it's growing. It's not a lack of opportunity that kills most investors. It's a lack of patience. Let's imagine two friends, Alex and Jordan. Alex starts investing at 25, just $300 a month. earning an average 10% annual return. He keeps doing it until he's 35, then stops. Jordan waits until 35 to start, investing the same amount every month until 65. By retirement, Alex, who only invested for 10 years, ends up with more money than Jordan, who invested for 30. Why? Because Alex gave time the chance to do its magic. The earlier you start, the less you need. The later you start, the more you have to fight against the clock. Time is not just a number, it's a multiplier. It's what separates those who chase wealth from those who build it. When you invest early, you're not just buying assets, you're buying decades of compounding, and that's something no salary can match. Compounding only works if you reinvest your returns. That's the golden rule. When you earn dividends, interest, or profits, don't cash them out, put them back in. Each reinvested dollar becomes a seed for new growth, and soon, your money starts earning money on its own earnings. That's when the graph bends from linear to exponential. At first, it feels slow, painfully slow. It might take years before you notice progress, but eventually, the curve explodes upward, and that's when people call you lucky. You weren't lucky, you were patient. You didn't chase trends, you built momentum. The rich don't have a different formula, they just have a longer horizon. The greatest investors, Buffett, Munger, Bogle, all share one mental trait: emotional immunity. They don't panic when markets fall. They don't celebrate when they rise. They stay still because they know volatility is the price of admission for long-term reward. The average investor fails not because they choose bad assets, but because they make good choices at bad times. They buy high when euphoria peaks. They sell low when fear dominates. That's not strategy, that's emotion. If you want to win in investing, you must master the art of doing nothing when everyone else is screaming. You must learn to trust math over mood. In the short term, the market is a voting machine, ruled by emotion. In the long term, it's a weighing machine, ruled by results. Let's simplify the magic with an example. If you invest $10,000 and earn a 10% annual return, you'll have $11,000 after a year. Next year, you don't earn 10% on your original $10,000, you earn it on $11,000. The next year, on $12,100. Over time, that difference grows massive. In 30 years, that same $10,000 becomes nearly $175,000 without adding a single extra dollar. Now, imagine doing this consistently every month. That's how fortunes are built quietly, not in trading rooms, but in the patience of routine. The rich are not playing a different game. They're just playing it longer. Money compounds, but so does knowledge. And here's what few people realize. The same law applies to your skills, relationships, and reputation. Every book you read, every project you complete, every network you nurture, they compound. Opportunities attract more opportunities. Wisdom multiplies decision quality. And over time, your return on experience outperforms any stock. That's why the best investment you'll ever make is in yourself, because it compounds across everything else. When you increase your value, your money follows. That's the engine behind true wealth. First you learn, then you earn, then let what you earned earn for you. Investing isn't exciting, and that's exactly why it works. It's slow, repetitive, boring. But it's the boring habits that make you rich. Every crash you survive sharpens your discipline. Every year you stay invested increases your compound power. Every reinvested dollar expands your freedom. It's not about timing the market. It's about time in the market. The greatest wealth transfer in history happens every time fear spreads. The impatient sell, the patient buy. And when the dust settles, the patient own more. That's why Warren Buffett says, the stock market is a device for transferring money from the impatient to the patient. Now let's talk about the silent thief, inflation. If you keep your money in a savings account earning 3%, while inflation is at 5%, you're losing 2% of your purchasing power every year. You're not saving, you're shrinking. That's why investing isn't optional anymore. It's survival. Your goal isn't just to make money, it's to protect it from decay. Investing is not about greed, it's about preservation. It's how you stay ahead of a system designed to erode value over time. When you invest, you're not gambling, you're defending your future self. Many fear investing because they think it's risky. But the truth is, doing nothing is riskier. The key is understanding calculated risk. Risk is not uncertainty, it's the price of opportunity. Every investment carries potential loss, but also potential freedom. And your job is to learn how to measure, manage, and balance that risk. Diversify your assets. Hold what you understand. And never invest with emotions you can't afford to feel. Risk doesn't disappear, it transfers. If you don't take it by investing, someone else will take it from you through inflation and time. Wealth isn't built on luck, it's built on systems. Here's the simple blueprint used by generations of investors. Earn actively. Build cash flow through work or business. Save aggressively. Protect your capital from consumption. Invest consistently. Turn savings into ownership. Reinvest automatically. Let compounding take control. Diversify intelligently. Protect against shocks. Repeat patiently. Let time do the heavy lifting. You don't need to predict markets. You need to participate in them, long enough to benefit from the natural upward trend of human progress. That's what every major index represents, the sum of collective innovation and productivity. Betting on the market long term is, in essence, betting on humanity's ability to grow. And that's the safest bet history has ever offered. You now understand the growth engine. Money multiplies through time, patience, and reinvestment. But wealth isn't just about numbers, it's about design. How you structure your investments, manage your emotions, and align them with your purpose. Because at the end of the day, the goal isn't to have more money, it's to have more life. In the next and final chapter, we'll bring it all together. How to build a practical, intelligent, and resilient investment system that serves you, your family, and your future. The system of freedom, the blueprint of wealth.
Money was never the goal. It was always the mirror. It reflects your discipline, your patience, your fears, and your understanding of how the world truly works. You can chase it your entire life, or you can design a system that attracts it forever. Because wealth is not built in chaos, it's built in structure. And the structure of wealth is made of habits, not miracles. Everyone wants financial freedom. Few are willing to build the system that sustains it. And in the end, it's not the smartest or the luckiest who win. It's those who create a machine that runs without them. That's what true investing is. Not chasing returns, but designing a future where you're no longer traded for time. Most people think investing ends with buy and hold, but that's only the beginning. The ultimate goal of investing isn't just wealth, it's independence. A life where your decisions are not dictated by bills, but by purpose. Where your energy is no longer consumed by survival, but by creation. And the way to reach that is through systems. A system doesn't rely on your daily presence. It's a set of rules, automations, and frameworks that keep compounding even when you rest. For the average person, this system begins with 3 layers: foundation, income and security; growth, investing and compounding; freedom, automation and legacy. Each layer builds on the previous one. Miss one, and the structure collapses. Let's decode them, one by one. Before you invest a cent, you must first stabilize your foundation. Wealth doesn't grow on chaos.
This means building a financial base that can support risk without panic. Emergency fund. 6 to 12 months of expenses in a safe, liquid account. It's not an investment, it's insurance for your peace of mind. Debt control. Paying off high-interest debt is your first investment. Every dollar you eliminate from a 20% credit card balance gives you a 20% guaranteed return. Income discipline. Track your spending, not to punish yourself, but to understand where your energy leaks. You can't invest effectively if your foundation is leaking stress. Security is not luxury, it's oxygen. And once you breathe freely, you can finally look forward. This is where your money begins to work for you. But growth isn't random. It follows principles. The modern investor has 3 engines: equity, ownership, stocks, index funds, startups; real assets, real estate, land, infrastructure; intellectual assets, content, automation, brand, or software you own. Each has different risk levels, but all share one essence: ownership. You don't build wealth by renting your time. You build it by owning something that others value. Diversify across engines. One generates cash flow, another grows equity, another scales digitally. Together, they create resilience. Never depend on a single stream of income. Even rivers dry up, but ecosystems thrive. The final layer of wealth is not about more, it's about less. Less work, less noise, less dependence. At this level, your focus shifts from accumulation to optimization. You start asking, how can I make my money run itself? That's when automation enters. Automatic contributions to your investment accounts, dividend reinvestment plans, real estate managers, or digital systems that operate while you sleep. Your money becomes a network, a living organism that grows and self-repairs. And when your income no longer depends on effort, you reach the state every human secretly craves: freedom of time. That's wealth. Not luxury cars, not big houses, but waking up when you want, doing what you love, and helping who you choose. Let's redefine wealth. Wealth is not having more, it's needing less. It's the ability to make decisions based on desire, not desperation. The true cycle of wealth looks like this: earn actively, trade your time for skill and capital. Invest wisely, trade your capital for ownership. Automate growth, let ownership compound. Create freedom, use time for higher purpose. And once you reach freedom, the game changes. You stop playing for yourself and start building for others. That's where legacy begins. Legacy isn't about monuments or family names, it's about systems that outlive you. When you invest, you're not just compounding money, you're compounding impact. Every investment is a vote for the kind of world you believe in. You can fund consumption or creation. You can fuel destruction or progress. That's why the ultimate investor doesn't ask, how much will this make me? He asks, what will this build? Your investments are the footprints of your beliefs. They tell the next generation what you stood for. You're not just buying assets, you're buying influence over the future. Freedom is terrifying at first, because once you have it, you can't hide behind excuses anymore.
Most people say they want financial independence, but what they truly want is comfort. Freedom requires responsibility. You must decide who you want to be when money no longer dictates your choices. That's why true wealth begins with identity transformation. You stop asking, "How do I make money?" and start asking, "What do I want to create with it?" That's the shift from survival to purpose. The investor's path isn't about escaping work. It's about choosing meaningful work. Let's turn philosophy into practice. Here's how you design your personal wealth system, one that works in silence while you live your life. Automate your finances. Every month, send money to your investments before you even see it. Treat it like a non-negotiable bill, your future tax. Set clear percentages. 10% for emergency savings, 20% for long-term investing, 5% for self-education. The rest, live, create, and give. Simplify your portfolio. Complexity kills consistency. A few diversified ETFs or index funds outperform most day traders over decades. Use systems, not willpower. Humans are emotional. Systems are consistent. Design your finances so that good decisions happen automatically. Review quarterly, not daily. Long-term wealth requires distance from noise. Check your direction, not your dopamine. With this, you transform money from a source of stress into a silent ally. Knowledge is the only insurance that never expires. In every market crash, in every crisis, those who understand the system remain calm because they know that history doesn't repeat, it rhymes. And every downturn is a transfer of ownership from fear to patience. You are no longer the worker in the system. You are the partner in its growth. That's why financial literacy isn't optional anymore. It's a form of self-defense. In a world where algorithms trade faster than thought, your advantage isn't speed, it's understanding. Learn, adapt, repeat. That's your armor. One of the most dangerous addictions in investing is more. More profit, more growth, more status. But there's a hidden wisdom in the word enough. Enough means your system sustains you. Enough means your money serves your life, not the other way around. Enough means you've won the game and realized the goal was never numbers, it was peace. When you reach enough, protect it, because the temptation to chase infinity